All right, hi everyone. So happy February 12th. So I'm just going to share this really quick, short and sweet February tax newsletter. The goal here is to just have some quick reminders. So as a business owner, just remember you get those T4, T5s filed by the end of this month's deadline. For individuals, February is often a very, very busy time because you're thinking of the RRSP contributions, meaning maybe you have you've done a quick personal tax estimate and you're really scared by that tax bill you're about to get. You then want to make a final RRSP tax contribution. You can still do so up to March 3rd, 2025, and that is going to contribute towards the 2024 tax year. Okay, so if that's of interest to you, absolutely, you can still do so. But just maybe take a moment and pause. Is the RRSP the best route to go? Before you just go ahead and make that contribution, just make sure you remember the differences between the RRSP in comparison to the TFSA and the FHSA. So if you need a refresher on that, please check out the main takeaways below, which is takeaway number 1. What are the differences? Okay. But then number 2, great if you open an RRSP, TFSA, or FHSA, you still need to actually buy something. And so this is something I see a little too often where people are injecting money into the cash account of, say, that RRSP, TFSA, FHSA, but they're not actually buying anything. And this really hurts my feelings because they're not actually investing. So whatever it is you choose, stocks, ETFs, mutual funds, bonds, GICs, just make sure you're researching what it is you want to actually buy, but you still need to actually buy something. So for example, maybe you love the S&P 500 ETF like VSP. You could actually buy this product, right? VSP.to in any of these accounts, be it your RRSP, TFSA, or FHSA. Okay, so this is just something I really, really, really want to put that reminder out there. In terms of the differences, okay, so very quickly here, RRSP, it's been around the longest. It is by far the most popular. The beauty of this one, tax deduction now, but please remember it is a tax deferred account, meaning you will pay taxes on that future withdrawal. Okay, TFSA, launched in 2009. This was and is a rock star. Fine, you don't get that tax deduction in the year of your contribution, but that growth is tax-free, assuming you're using it as intended. So back in 2009, if you were already 18 years old, your TFSA limit for 2025 is actually 102,000. Okay, and imagine that 102,000 grows to $1 million, and that is withdrawn tax-free. At that point, just remember me and treat me for maybe a coffee. Okay, so again, very, very powerful. But don't forget about the new FHSA that was launched back in 2023. The purpose of this one is to help those first-time home buyers save for that future residence, okay, where they're going to live. So if you qualify for this, I think it's just really important you research or you just ask questions to really understand this very, very powerful account. It's the best of both worlds from the RRSP and TFSA perspective. You get a tax deduction in the year of contribution, and that future growth, assuming you withdraw it for a true qualifying home, is tax-free later. So that is just incredibly powerful, and it's just not being used enough. So I'm not sure what, is it bad marketing, skepticism? Either way, just make sure you do your research and open the account if you're qualified. Okay, 1 minute to go. Just very quickly here on the capital gain inclusion rate. If you've been around since, 2024 July, I've been ranting about this since then. Actually, June 2024. Anyways, the update here for corporations, really no update. We're still waiting. Still has not passed into law, but what CRA has announced is, or what the government of Canada, I should say, has announced is that they're going to push it to January 2026 effective date if it passes. Anyways, lots of thoughts and feelings on this one, but really at the end of the day, we are just sitting around and waiting and crossing our fingers that this does not pass. Okay, just a reminder again, this is all for educational purposes, so please don't consider this as your financial tax or legal advice. But if you have any questions, you can always reach out. All right, thank you.